Good morning, students. This is Gurjeet Luthra, your accountancy teacher. The topic for our discussion for today for plus 2 accountancy is past adjustments. Now let's see what are these past adjustments. Sometimes it happens is that in the previous year or previous years we have not appropriated something, we have not passed certain adjustment appropriation. For example, we have not credited the interest on capital, we have not given salaries, we have not charged interest on drawings, and later on, when we have already divided the profit, we come to know that these adjustments have been missed out. So for tackling these adjustments after the accounts have been closed for the year, after the profits have been distributed, that particular topic is termed as past adjustments. So let's see what are these past adjustments. To begin with, sometimes after the financial statements have been prepared, some errors or omissions of earlier years are noticed. For example, IOC omitted or charged at the wrong rate, etc. So these are rectified by either passing a single journal entry or by passing the adjustment entries. So our topic for concern today is how to correct the above omissions or discrepancies by passing a single adjustment entry. So when a single adjustment entry is passed, here net effect of errors is determined and an adjustment entry is passed through partner's capital or current account. So following steps are followed. First of all, prepare an adjustment table with one column for particulars column, okay. Then the partners debit credit if A and B are partners, and then debit credit for the second partner and then for the firm. Is it clear? This is how an adjustment table is made. Step 2. Calculate IOC earlier omitted. Place IOC due to individual partner in his credit. Let's take an example for doing this. For example, A and B partners, and say interest on capital was rupees 10,000 and rupees 5,000. Profit for the year rupees, say 1 lakh, was divided equally without providing interest on capital. So pass an adjustment entry. So let's see how to pass the adjustment entry. Now we'll make columns like this: particulars, A, B. Now, first of all, we have divided this 1 lakh equally in the wrong way without providing for interest on capital. So what we will do, wrong profit to be debited. So debit things we will write in brackets. So we have already divided 1 lakh wrongly, that means 50,000 each wrongly. We will take it back. So 50,000. Now interest on capital to be credited. Now the interest on capital was 10,000 and 5,000. So we will credit it. Credit, we won't write the brackets. 5,000, 10,000 and 5,000. Now the correct profit to be credited. Now correct profit is 1 lakh minus interest on capital 10 plus 5, 15,000. That is 85,000. We will credit it now 85,000 equally. That means 42,500. Now we will write the net effect the net effect will be, now here the credit items are 10,000 plus 42, 52,500, and the debit item is 50,000, so that means 2,500 credit is there. Okay, similarly here we see debit is 50,000 whereas credit is 47,500, so that means debit is more, so 2,500 debit. So this is our adjusting entry. So now the adjusting entry that we will be passing will be B's capital account debit 2,500 to A's capital account 2,500. This is the adjusting entry. There's another way to do the things, or we will make the following columns. The columns will be particulars A, B, firm, debit, credit, debit, credit, debit, credit. So first of all, wrong profit, it will be debited to partners capital account. The wrong profit was 50,000 each, and firm always goes reverse with the partners, so 50,000 debit in the partners, and in firm it will be credit 1 lakh. Clear? Now interest on capital to be credited to partners capital account, so it will be 10,000, 5,000. Clear? And firm always goes reverse, so it will be 15,000. Okay, now the net profit correct, so the correct net profit will be, here it will be, see, we can call it as net effect also, 1 lakh, 85,000. So as it is debited in the firm, so it will be credited in partners capital account in equal ratio, 42,500, 42,500. Now here in partners capital account we will find out the adjustment. So here debit is 50,000, credit is 52,500, so net effect for us will be credit 2,500. Here it will be debit is more, so debit 2,500, and again the adjusting entry will be the same. So this is the way how to attempt the adjustment entry for the closed partnership accounts. Now let's come across the steps. So I have already told you how to prepare the partners adjustment table. Now step 2 will be calculate IOC earlier omitted, place IOC due to individual partner in his credit, and the total IOC in debit column of the firm, as we have already seen in our example. Okay? Then step 3, if there is interest on drawings, so interest on drawings is to be debited to the partners, so it will be debited to the individual partners on his debit, and the total IOD is credit column of the firm. Find out the balance from the firm's column. As we have found out the balance, you can see from the earlier part that we have found out the balance, that is 85,000, that will be net profit or net loss. So divide profit loss among partners in their PSR. Now find the balance of partners capital account. In case one partner has debit balance, the other shall have a credit balance. That means the debit must be equal to the credit balance. Pass the adjusting entry. Are we clear? You have to note one thing: if adjustments are made for more than 1 year, then ascertain the consolidation position and then pass the adjusting entry. Are we clear about this? Yes. Now the first method which we did, that was correct amount to be credited, that we will write in plus, that means without brackets, amount to be debited in minus bracket, then total correct credit, whatever it is, then the wrongly credited amount, then the net effect, as we did in the first method in our example earlier. Are we clear? And made the adjustment accordingly. Now, when adjustment journal entries in place of one adjusting entries are passed, so entries, remember the word entries, when the entries word is written, the analytical table isn't prepared. That means we do not prepare this table. This table is not to be prepared. Okay. Now, journal entries are passed for each error by debit or credit P&L adjustment account. So you have to see the question. If it is written pass a single adjustment entry, then we don't have to go for this method. This method is only to be followed when we are told that pass many adjustment entries. Okay. So after all journal entries for the adjustment, P&L account adjustment account is closed by debit or credit to partners capital. For example, suppose interest on capital has been omitted. The journal entry for that will be, so it will be P&L adjustment account to partners capital account or current account if the capitals are fixed. For the items to be debited, for example, interest on drawings, so entry will be partners capital account debit to P&L adjustment account, and whatever net profit or loss due to the above adjustment is there, profit is to be transferred to partners capital account and loss to the partners also to be transferred to the partners capital account. So let's see, continuing the above example, if it would have been written that pass the necessary adjustment entries. So now here the entries would have been first P&L adjustment account debit to A's capital to B's capital. Clear? This is for interest on capital. It was 15,000. That means 10,000, 5,000. For the wrong profit to be taken back, it will be A's capital. This is for interest on capital. A's capital debit, B's capital debit, 50,000 to P&L adjustment account, 1 lakh. And third, the net effect. Now the net effect will be 1 lakh minus 15,000, that is 85,000. So that this is for wrong profit. Now third entry will be, now we have to credit them, P&L adjustment account debit 85,000 to A's capital to B's capital 42,500. So this is the second method. So now what we have to remember is that if we are asked to pass a single adjustment entry, we have to follow this first method. Okay. And if we are asked to, first method, any of the two ways we can do, I will recommend this way. And if we are asked many journal entries are to be passed, we will adopt this method. So I'll be giving you some assignments to be followed. So please try to go through your notes which have already been dispatched to you, and then solve the assignment, and we will discuss the assignments. Thank you.